This is Paul Aho talking to you from Storrs, Connecticut, outside of New York City. And it's a pleasure to be with you virtually today to talk about the global poultry outlook, market trends, and challenges. And when this year started in January of 2020, I thought that what I would be talking about all year long would be the African swine fever. And who would have ever guessed that that issue would be pushed aside, pushed into the background, and another virus, even more important, would come to the fore? So we have two viruses without vaccine or cure yet, African swine fever and COVID-19, and they are dominating the discussion as far as animal agriculture goes. So let's start with African swine fever. Chinese pork production in millions of metric tons has come down from 54 million metric tons in 2018 to 34 million tons projected for this year. That's a drop of 20 million metric tons. That's a big gap, and it's impossible to be filled completely. And if it weren't for COVID-19, that would be the big news this year, how we're coping with the consequences of African swine fever. So the Chinese are making up some of that gap by importing pork, of course. Imports are going from 1.4 million to 1.9 million, but that only bridges about 12% of their protein gap. They're importing some chicken, but the chicken imports will only cover 2% of the gap. So there's quite a gap left over. About 27% of the gap is being covered by increased chicken and fish production in China. Sometimes we forget how important fish production is in China. It's extremely important. And then 23% are covered by the increased imports that I mentioned earlier. So we still have a gap of 10 million metric tons, which helps increase the price of protein worldwide if it weren't for COVID-19. And of course, COVID-19 is dominating the news now. So where are we with this disease? I think probably the best explanation of where we are is to think of World War II and the European theater of World War II. On November 10th, 1942, the English had their first victory over the Germans. It happened to be in North Africa. And Churchill famously said, this is not the end. This is not even the beginning of the end, but it is perhaps the end of the beginning. And I think that's where we are with COVID-19. We're at the end of the beginning. It's pretty clear that we're going to have 1 million deaths worldwide by August or September. Deaths have been increasing at a rapid rate recently. As you can see on this graph, it'll probably start slowing down in July and August, but 1 million is a big number, and that may not be the end of it. So I'm making some assumptions about COVID-19 in order to predict the future. The future is, of course, extremely difficult to predict at this point, but the assumptions I'm making are that there will be a vaccine and or a cure. Either one would work. We need a vaccine or a cure. And I think it'll come sometime in 2021, not 2020. I think the people who talk about a cure or a vaccine this year, that's just happy talk. The more likely scenario is that sometime in 2021, either early or late, we will have either a vaccine or a cure or both that will finally, when we get one of those two, we'll be able to put COVID-19 in the rearview mirror. Now, between now and then, there's going to be multiple waves and outbreaks around the world and significant economic disruption. So this is a map of where COVID-19 has hit so far. And so the larger the country on the map, the more cases there have been of COVID-19. And you can see that North America and Western Europe have been hit hard. Africa and South America, not so much. Parts of Southeast Asia, not so much. India, not so much. But what we may see in the next several months are increasing cases in places that have not had a big surge. So, how bad will coronavirus be worldwide? Well, I certainly think there's going to be more than 1 million dead when all is said and done. In the worst case scenario, it would be many millions, but that appears to be unlikely now. Probably somewhere between 1 and 2 million, and a worldwide economic recession. Of course, the question is, what kind of recession are we going to have? Are we going to have a V-shaped recession or a U-shaped recession? And I think what looks to be likely is a U-shaped recession. Unfortunately, a V-shaped recession would be nice, where we go down this year and come bouncing way back next year, but I think it is unlikely since the cure or the vaccine will only be coming in 2021. So I think what happens is we go into negative territory this year. That's already baked in the cake. No question about that. A little bit of a recovery next year, not much. And then finally, in 2022, we can expect real economic growth again. Similar graph for the world chicken growth rate. It was going strong here in 2019, almost 4% world chicken growth worldwide. I think it'll drop down into negative territory this year, struggle to come back in 2021, and then finally start increasing rapidly again in 2022. Now, for those of you who have listened to my talks before, particularly talks that I gave in Asia 10 years ago, you'll remember that I talked a lot about income quintiles and chicken per capita consumption. I like to look at quintiles to try to figure out what's going on. So the 5 quintiles on the left are the world population divided into 5 equal pieces, and each quintile is the same number of people. The first quintile are the richest 20%. The fifth quintile are the poorest 20%. Now, in the middle, I have the chicken per capita consumption at its peak in 2019. So you'll see that the first quintile was 25 kilos per capita, 18 kilos for the second quintile, and down to 1 or less than 1 for the fifth quintile, for an average of 12.1 kilos per capita worldwide. I think what's going to happen in the next, between 2019 and 2021, is that we're going to lose about a half a kilo of chicken production and consumption worldwide. So the trough should come in 2021. And you can see there's no effect on the first quintile. And then the second, third, fourth, and fifth quintiles lose about a kilo each. Of course, losing 1 kilo when you only have 1 kilo is a lot more dramatic than losing a kilo when you're eating 18 of them. So the poorer you are, the more this coronavirus is going to affect you. Another way of looking at that would be to look at the countries involved. US 19.9 million metric tons last year. I am expecting 19.6 million tons in 2021, small decline. China, China, of course, is only the white-feathered commercial industrial chicken, 13.5 million tons last year, increasing to 14, with China trying to cover that. Remember that pork deficit. Chicken is helping to cover that pork deficit by increasing production. Brazil, I see being pretty stable at 13.7, a loss in Europe, and a small loss in India, Russia, Mexico, and Argentina, rounding out the top producers. So turning to the U.S., how bad will coronavirus be in the U.S.? I think it's going to be at least 4 times what we would expect in a normal flu season scenario, about 200,000 dead in the U.S. Worst case scenario would be 1 million. That doesn't appear likely. And of course, an economic recession. Now, this is one of my favorite ways of looking at income and meat consumption, and that is taking household median income and comparing it to per capita meat use. This is for the US, but you could do it for any country. And remember to use median income, not average income. So for household median income, in the US, there's approximately 100 million households. So the median income would be that 50 millionth richest household or the 50 millionth poorest household, the household that's exactly in the middle, with half the population richer, half the population poorer. That's median income. And I like to compare that to per capita meat use. So if we start in 2007, you can see how median income went down from 57,000 per year median income down to around 52,000. And there was a drop in per capita meat consumption from 220 pounds, just about exactly 100 kilos, down to near 200 pounds. And that makes sense because meat is, after all, a luxury. When economic times are hard, people cut back on their consumption of meat. Now, from 2012 to 2019, we had a rapid increase in the median income from 23,000 up to 63,000 per household, and meat consumption responded in a corresponding increase from around 200 pounds to 224 pounds per capita. Now, here's the tricky part. What happens now? We've had a sudden drop in median income this year. I think it will continue to drop in 2021 and then start back in rising in 2022. I would expect, given the experience the past with this graph, that per capita meat use will also drop fast in the next 2 years, from 224 kilos down to perhaps 210 in the US, then starting to come back in 22. We've already seen pigs being euthanized, chicken hatching eggs being destroyed. There's no question meat consumption is dropping. So here's US quarterly broiler production in 2019 is the highest rate on this particular graph. 2020 started with a big increase over last year, but that will come to a sudden halt in the second quarter, with production dropping compared to last year, and 2021 a little smaller still. I'm going to talk a little bit about trade. We have seen increased imports by China, of course, which I mentioned earlier, but the recession lowers total world demand. So we have increased demand by China and reduced demand in other places. And it's important to remember that oil exporters are particularly important buyers of chicken meat. So as oil exporting countries lose income and their economies fall, they're going to be importing less chicken. So China helps, but it's not as important as the entire rest of the world. About 88% of all chicken is produced and consumed in the same country. And there's a welter of non-tariff and tariff trade barriers that restrain trade. Barriers really are the rule, not the exception. Chicken trade can be quite difficult. And this goes back a long ways. Here we have Charles de Gaulle in the 1950s keeping the American chickens out of the European market. And of course, there's hundreds of examples around the world where countries prohibit the import or severely restrict the import of meat. So what we end up with is that trade is a relatively small but stable percentage of total world chicken production, around 12%. And you can see on this graph from 2011 to 2020, a pretty stable percentage at around 12% of world chicken production goes into trade. So I would expect chicken exports to be affected less than chicken production or chicken consumption. There'll be a slight decline this year and next, but exports will not be affected as much as production and consumption are. As far as U.S. poultry exports go, the China market is now open. It was closed for quite a while. Paws dominate the sales so far. And those paws are worthless in the United States without China. With the China market open, they're a valuable part of production in the U.S. Mexico is the most important overseas market or export market. With the Mexico deal, they continue to have the status quo in trade. Now, the high value of the US dollar helps to make it more difficult to make exports. This is a picture of, so this year in 2020, we exports resumed to China. And this is a picture of the very first box of paws that were sent. This happens to be from Foster Farms in California to China. Now, I should be very careful about making any predictions about prices. This is an extremely difficult year to predict prices, but I'll make an attempt at it anyway to predict breast, leg quarters, and wing prices. Deboned breast meat prices have been all over the map so far this year, starting off at a relatively low level, 90 cents a pound in January. Then, when the coronavirus started and people went to the supermarkets in a panic to buy things like toilet paper and chicken, the price spiked up in March, only to fall again after that initial rush of buying ended. And we came to the realization that food service had ended. So there's a mismatch of supply and demand. Then the price spiked way up in May due to plants being closed. So we have plants being closed, and then again another shortage of chicken. So it's been an unstable yo-yo price of deboned breast meat so far this year. And I hesitate to make any prediction at all about the rest of the year, but I'm pegging it at around $1.20 per pound for the rest of the year. And surely, in reality, it's going to be more volatile than that. Again, I don't think I've ever had less confidence in my ability to predict the price of deboned breast meat. Let's move on to leg quarters. Here's leg quarters 2019, 2020. You can see the price in 2020 falling through the beginning of coronavirus, partly due to the weakness in exports and the high value of the US dollar. And I think it'll maintain itself at a price 32 cents per pound, lower than last year, but not extremely lower, ending the year at a similar price to last year. Wings are always interesting. When the food service places closed in March, there was a decline in wing prices because all of a sudden those bars where people go to drink beer and eat wings closed up. And so there was an excess of wings. Price plummeted. And then in May, we're finding some of those places starting to open up again, and people buying more of them in supermarkets as well. So here's an example of a V-shaped. I think maybe the only example we'll find of a V-shaped recession, it will be in the whole wing price. So let me wrap up the current world situation and take a look at grain, labor, and government policies, starting off with grain. As far as grain goes, chicken producers can be happy. Anybody who's using grain can be happy this year, lower costs. Not so great for those producing grain, but a great year for those using grain, lower cost this year. And it's no wonder that the price is going down, based primarily because of demand, lower demand, less animal feeding, and also less ethanol. Ethanol is blended in the United States, it's blended at 10% of gasoline. Gasoline sales are way down, ethanol sales are way down. So there's less grain being used for both animals and ethanol. So at least as far as corn goes, it's extremely likely that we're going to have lower prices. Here's the average U.S. farm price of corn, and it's USDA numbers up till 1920, crop year 2019-2020. I think in crop year 2020-2021, which starts this September, I think we'll see a lower price of corn due to those demand issues. Now, I have a similar view of soybeans, although I know that's a contrarian view. I think soybeans will also, and soybean meal will also be dropping a little bit next crop year. And I think the reason for that is that we had a good harvest in Brazil and Argentina this year. We're going to have a good harvest in the U.S. this year. It appears, so far, it appears that we'll have a good harvest. Crop went in early. Uh, as I mentioned earlier, we're feeding fewer animals. Uh, so I don't see soybean prices rising significantly this year. They'll either stay about the same or dip a little bit, which is, again, it's great for users, not so great for the sellers. But the sellers can take heart that after the world economy improves in 2022, we can expect grain prices to rise. So if you're a grain user, buy it while you can. Labor cost. Whenever I discussed labor before, it was always cost per person and productivity. But now we have this third issue, and that's the increased cost and risk to workers due to COVID-19. And we have cases of processing plants being closed around the world due to this disease, increased costs of protecting workers, increased costs of wages, people willing to do this job. So uh, certainly coronavirus has had a big effect on labor costs in a lot of places. And of course, there's always government policies that the business climate, tax policies, tariff policies um, that can affect uh, the poultry industry. Now, one thing that's happened in the last year due to African swine fever is that instead of pork, chicken has become the king of meats. You can go, if you look back at 2018, uh, pork was over 110 million metric tons worldwide. Remember that China is about half of that, whereas chicken was 95 million metric tons. And it certainly was not expected. I expected that in the long run, chicken was eventually going to surpass pork, but it was going to take a long time to get there. And what's happened just over the last year is that chicken and pork are almost neck and neck. And I think what we'll see this year is chicken surpassing pork uh, worldwide to become the king of meats. Now, will chicken be able to sustain that through the future? 21 and 22, chicken will be coming back, pork will be coming back. It may be a neck and neck race here to see which one is the dominant meat. So just to wrap it up, today, COVID-19 has changed everything. Uh, I think a severe worldwide recession is possible. Certainly, a recession is probable, and I believe we're looking at a U-shaped recession, not a V-shaped recession. It would be nice if it were a V-shaped recession that went down and came back really quickly, but I don't think that's going to happen. I think we're going to have a U-shaped recession. We're going to come out of the recession in 2022 with either our vaccine or our cure secured by then. In all other economic recessions, meat consumption has declined. So I don't see how this is going to be an exception. During the worldwide economic recession, income will go down significantly in many countries, if not all countries. And meat consumption will also decline during this recession. Coming back and going forward from 2022, meat consumption will come back. Economy is likely to come back, but it's going to take a couple of years to get there. Interestingly, exports will remain relatively stable in volume throughout this period. So that's the view from Storrs, Connecticut. And I wish I could be with you all, but it's good to be able to communicate in this manner. Thank you very much.